Nigeria's central bank hikes rates sharply to combat inflation. Ghana has revealed its commitment to completing the external debt restructuring process as soon as possible. And again in Nigeria, CBN begins sale of forex to Bureau de Change Operators. This and many more will be our talking points on the show today. Welcome to Business Edge. I am Perpetua, Fasanmi-Peter. We begin with the top business headlines from across the continent. Stay with us. On February 28, 2024, Yemi Cardoso, the Central Bank Governor of Nigeria, will meet with foreign investors. This meeting, organized by the Nigerian Exchange Group and supported by major banks, aims to strengthen Nigeria's financial sector's global ties. The meeting will allow the central bank to communicate directly with international investors, especially as it undertakes reforms to stabilize the naira and boost the economy. However, recent data shows a decrease in foreign investors' purchases of Nigerian stocks and an increase in sales, indicating caution among investors. Despite this, the central bank and the Nigerian Exchange Group continue to encourage foreign direct investment to stimulate economic development and stability. Nigeria's Minister of State Petroleum Resources, Ken Lokpobiri, warns that without increased investment and crude production, new and existing refineries, including the Dangote Petrochemical Refinery and the Port Harcourt Refinery, may lack sufficient local crude oil for petroleum production. He suggests transferring oil wells to capable investors to boost production. The Dangote Refinery, 650,000 barrels per day facility, has started producing diesel and aviation fuel, receiving 6 shipments of 1 million barrels each from the Nigerian National Petroleum Company Limited. Marketers report not receiving refined products from any refinery as fuel importation continues. Lokpobiri emphasizes the need for environmentally friendly resource exploration and the right investments for transition. And finally, the monthly outflow of dollars from Kenyans residing outside reached record highs due to the easing inflationary pressure in developed economies like the US and the UK, which also helped relieve pressure on the Kenyan shilling. The highest levels ever recorded for diaspora remittances were recorded in January, totaling $412.41 million, or 65.83 billion shillings, based on an average conversion rate of 159.63 units per dollar, according to government data. According to data from the Central Bank of Kenya, CBK, remittances from the United States, which made up 54% of all remittances, increased by 8.17% annually to $221.01 million, which is about 35.28 billion Kenyan shillings, a 25-month high. These are the stories we're tracking at this hour. We'll take a break, and when we come back, we'll bring you a market update. Stay with us. No, I don't used to do that one. This is how I've always been doing it. That's how I've been doing it. I've never started straight. This was the original format. Actually, the first day was a mistake. That was why it was not followed. I was there the day we did the test run. This was the original format. Nigerian stocks extended losses as Tuesday trading deepened Monday's woes. The NGX All-Share Index plunged 1,412 points, while market capitalization shrunk by a staggering 773 billion naira. The downward trend was driven by significant declines in heavyweight suit stocks, particularly FBN Holdings and MTN Nigeria. And now let's take a look at the figures, beginning with the All-Share Index. For the all-share index, we saw a decline minus 1.38%, and then it's ended at 100,582.89. And now let's look at the market capitalization, which also dropped by minus 1.38. It dropped by 1.38%, closing at 55.04 trillion naira. Let's take a look now at the top performers for the market. The top gainers, we have AfriPort, 7 naira 80 kobo after 10% gain, and then for Omatex, 78 kobo after 9.83% gain. For Julie, 2 naira 82 kobo after 9.68% gain. Tantalizer closing 40 kobo after gaining 8.96%, and for Ella Lakes, 3 naira 8 kobo after gaining 8.86%. And now let's take a look at the top losers for the day. FBN. I talked about this during my introduction, how that this particular stock and MTN pulled down the market yesterday. So we have it close at 13 naira 60 kobo after losing 10%. For Multiverse, it closed 15 naira 30 kobo after losing 10%, and then MTN closed 222 naira 90 kobo after losing 9.94%. Mark Nichols closed 1 naira 29 kobo after losing 9.79%. And finally, we have Consolidated Hallmark PLC closing 1 naira 22 kobo after losing 9.63%. Well, trading has started today, and we look forward to what the market will look like. We'll definitely bring you that tomorrow. We'll take a break now. When we come back, we'll bring you more conversations on the show for today. This is Business Edge. Stay with us. In a bid to curb inflation and stabilize forex markets, the Central Bank of Nigeria has hiked its benchmark interest rate to a record 22.75%. This 400-point increase, the highest since 2017, aims to cool inflation by making borrowing costlier and reducing money supply. Additionally, the bank tightened lending by raising the cash reserve ratio to 45%, further limiting available credit. These measures, though potentially slow economic growth, are intended to tame inflation and stabilize the financial landscape. I am now joined by Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham Securities. Thank you, Oladipo, for joining me today.
Yeah, thank you very much for having me on.
Well, I'd like to start by saying that I spoke to some financial market players about their expectations before the MPC meeting, and they gave me, a lot of numbers. Some said 200 basis points, and I had one person who actually said 500 basis points. But what was your prediction?
Well, for me, like I always say, at the initial, I was thinking we would do about 300 basis points. But when we start seeing what was happening in the FX markets, I knew very well that we'll get about 500 basis points. So my prediction for yesterday was 500 basis points, thinking that the central bank may be more hawkish, and also maybe they will actually align with the expectation of foreign investors as well. And that's why I actually was looking at 500 basis points yesterday.
All right, you talked about expectations of foreign investors. Let's talk about these dynamics. What's the role? What's its dynamics really in all of this?
Well, foreign investors are currently looking at, because one thing about it is that they are investors. They don't invest with emotions. They shop where they can get adequate investment return. And at a time where our MPI was around 18.75, foreign investors were like, inflation was close to 30%. And you can't have that huge gap between your monetary policy rates and inflation. And at the same time, I want them to actually come to the market. They have the view that you need to do something urgently, and you need to do it aggressively. And I think you also stem from the fact that the last time we had a monetary policy meeting before yesterday was the one we had in the month of May. So it simply means that we missed the one for July, we missed for September, we missed for November. And if you check over time, between that time and now, inflation has gone up by, between that time and December, rather, inflation went up by about 625 basis points. And it also means that inflation went up by 655 basis points, and nothing was done to the monetary policy rates on the part of the central bank. So coming to the new year, it's obvious that there will be a bit hawkish coming into the year, knowing fully well that we are battling inflation. And at the same time, they need to actually attract investment into the market. And I think that is where most of their assertions actually came from.
Okay, let me say to a very large extent, we understand the consideration for foreign investors. But then let's take a look at the snapshot. We have the MPR increased by 4% or 400 basis points, as some would say, to 22.75%, coming from 18.75. The last meeting was actually in July. Okay, now CRR has also been increased as CRR to 45% from 32.5%. The asymmetric window has been increased to plus 100 / minus 700 from plus 100 minus 300. And then finally, the liquidity ratio was maintained. That's the snapshot from the meeting yesterday. Hawkish, some persons have said. But then let me get your reaction to these figures and what each would, I guess you've already reacted to it anyway. So let's get, what each of these would mean to businesses, the financial sector, and economy at large. I'd like us to begin with the MPR.
Well, if you look at the MPR, one thing about MPR is that it will have negative impact on businesses. And I think I've said it on the show earlier in the year, that any businesses that want to come to the markets and raise money, the best time to do that is the month of January. Because we know that by February, when the Monetary Policy Committee will sit, there will be a bit aggressive. And we know that will also impact on the market. And also, you would have seen more like a poll guidance in terms of action from the DMO. Where they actually moved the 1 year bills from around 12% to around 19%. And that already gives you an effective yield of about 23.4 levels. So it's more like a precursor to the action that will come after on the part of the monetary policy guide. Between today and the end of this week, I will see banks actually circularizing their customers to actually increase their existing loan. Maybe by another 400 basis points. So it simply means that if you have a loan running with the bank at maybe about 28% or about 27%, the bank will soon knock at your door to come and tell you that now the new prevailing rate for your loan will be 31%. And that will be more like the minimum on the part of the banks. So it will become more like a very high time for businesses. And also on the part of the government has done something that I feel that I believe that the government actually transformed the market. And what I mean by that is this: when you look at the budget for the year, budget deficit is over 9 trillion. But when you look at what we are supposed to borrow in the domestic market, it's about 7.85 trillion. And between January and now, the government has done over 4 trillion in the market. Just last week, they did about 2.5 trillion in the treasury bills and the bond market. And they did close to about 3 trillion rather in the bonds and the treasury bill market. Sometimes early in the month, they did another 1 trillion from the treasury bill market. And when you sum all this together, it seems that the fiscal policy guy understood where the market is going. And for me, he also a poster that shows that both the monetary policy guy and the fiscal policy guy are working together now. So as a result of that, they actually front-loaded the market by borrowing aggressively during part of the year. So if you look at what they are supposed to borrow, they've done over 50% already. So it simply means that the remainder will be borrowed in the remainder part of the year and may not be as costly as what they have done now. So we expect rates to go up, and the impact of it is that it will be more difficult for business to raise cheap loans in the market. Even those that actually have the capacity to come to market to do commercial paper, to raise bonds, they have to raise it a bit above where the market is currently trading now. All
right, let me come in here. Shouldn't government also be concerned about this private sector, really? Shouldn't government be concerned? Because at the end of the day, we see that it probably has direct or indirect, impact on employment and a lot of other things. Let's speak to that, striking that balance, sort of.
Yeah, for a long time, that's the part that the government have been looking at. But one thing is this: we have to look at things in isolation. On the part of the central bank, they can only use what they have in their own arsenal to actually curtail what is happening in the economy. The central bank don't have too much things to use. They can use monetary policy. They can use open market operation. That's automobiles. They can use interest rate. They can use some other things like what they are currently using now. So on the part of the central bank, their duty is stability. Their duty is ensuring that they are able to cope inflationary pressure. So this is more like their KPI. When you start talking about growth, you have to put that onto the table of the fiscal policy guide. Of course, they need to work in tandem with the monetary policy guide, but that's still more on the table of the fiscal policy guide. So the central bank needs to ensure that Naira maintains stability. The central bank needs to ensure that inflation is at a reasonable level and based on their expectations. So central bank is just doing what they need to do. So the onus now falls on the monetary on the fiscal policy guide to not tighten up their belt and start showing out policies that they think will at the same time help to actually improve the level of growth in the economy.
I'm torn between two right now. I want to, follow up on that conversation around, the fiscal authority tightening up and all of that. And then there is also that conversation about some person saying really that at the end of the day, it feels like the monetary policy tool, which the CBN uses, which is, of course, the MPR, really, at the end of the day, that it feels like once it's increased, inflation is also increased. That we're not seeing a situation where an increase in the MPR also, probably reduces inflation in any way. And they have said this has to do with the fact that this is not, this is not a credit-driven society, or some would say it's not supply-driven inflation and all of that. So if that is the case, why do we keep doing this?
So there's something that I also wonder to do for a long time. The monetary policy rate has not been potent for a long time, but since the emergence of this new central bank, he has been actually pushing it to ensure that the monetary policy rate is becoming more potent than the way it used to be. And I think that's exactly what we will see henceforth. And it's crystal clear truly that the current inflationary crisis is both demand and the supply side. Maybe the impact from the supply side is more than what we are seeing on the demand side. But don't also forget that part of the problem we are having currently is still more of the offshoot from the ways and means and credit that actually hit the system, and the impact of the palliatives from the COVID-19 crisis aftermath. So some of these things are still seeing, we are still seeing the element of the level of cash in the system putting pressure on the economy.
All right.
Let's look at it from this angle as well. FX, currently we keep seeing aggressive impact on FX, speculations and the like. So the central bank needs to ensure that there are attractive investments that will actually lure people away from the parallel market or from speculating on the currency to actually invest in credible security. And that's one of the things that the central bank is doing. So it's true that we have the supply side issue, but the demand side issue, that is the one that central bank is catering for.
I'm afraid, Mr. Ajayi, we'll have to end the conversation here. There's a lot more to talk about. I also have a lot of questions for you, but we just have to end it here. Thank you so much for your time on the show.
You're welcome.
We'll take a break now. When we come back, we'll dive more into the conversations for today. Stay with us. The Central Bank of Nigeria has announced a significant shift in policy, resuming the sale of foreign exchange to Bureau de Change operators nationwide. This decision comes 3 years after the previous governor, Godwin Emefiele, suspended sales in 2021. Also, the Nigerian Senate has sought an amendment to CBN Act No. 7 of 2007, proposing an amendment to the tenure of the CBN Governor and a limit to the amounts the federal government can borrow from the Apex Bank under the Ways and Means advances. To further talk about this, I'm joined by Mukhtar Mohammed, the CEO, Asher Investment. Thank you, Mukhtar Mohammed, for joining me today.
Thank you, Perpetua, for having me.
All right. Well, we all have been keeping up with CBN's new circulars and guidelines, and I might as well start by asking how many of such have been released in the past, 7 to 8 weeks. How many have we received?
CBN circular. They call them Circular Bank of Nigeria now.
Well, that was on a lighter note. Now, the latest of these circulars is the one that says that the CBN has commenced the sale of foreign exchange to eligible BDCs to meet the demand for invisible transactions. And I recall that I've spoken to a lot of, financial market analysts, and they've talked about their concerns for invisible transactions and, creating sort of a window, to cater to that. So first, let me get your reaction to this.
Yeah, long overdue, since they were not able to create an alternative window for the invisible people. So they have to go back to the beauty change. And I think for me, that tells you why investors sometimes don't want to come to this country because of policy somersault. I didn't see any reason why the CBN will more or less like going cap in hand, begging the BDC to come back. So for me, I didn't think it was a welcome development. Even if I feel that as it stands now, it could help liquidity in the market. But again, when you took those decisions some years ago, you should have known the consequences of it. And again, with the CBN taking the decision, what happened? Why did they not? I remember during Godwin Emefiele time, they took their decisions from the BDC and gave them to the money deposit bank. Was there an infringement? Was there something the money deposit banks were not doing? And then again with the BDC, how are you going to regulate them? I mean, there's a lot that is calling for answers. And then we said, oh, the BDCs, they are there now, so you're giving them $20,000, and you say they shouldn't give cash. What are the strategy put in? So there's a lot of questions to happen. But the good thing is, at least it will help the liquidity in the market, especially on that retail side. And again, but I hope that what we are seeing is not what we've been seeing from this management team of CBN or this administration. They seem to see it before they begin to think of how do we go about doing it. Hopefully, they will be doing it from today. The BDCs will start having those effects in their system, and then we'll be able to do the needful. But if whereby the CBN is still having issues saying, oh, we've not sent it, we are going to send it, then that will cause another panic in the market. Maybe the panic to be like, oh, the CBN does not even have that dollar. So that could see the Naira going higher again.
Now, from the foregoing, does it seem to you that there is some form of correlation or even direction in the CBN's handling of the forex market crisis? You probably want to do an aggregate of all the circulars and guidelines and all of that. Does it seem to you that there is actually a policy direction? There is somewhere they are going with all of this?
Yes, there seems to be somewhere they are going, but in the middle of the road, they seem to be confused and be scared of because of what is happening, and maybe because of the cry from Nigeria. They seems not to be sticking to their guts on what they actually want to do. I think getting back the Bureau de change back, it's something that they didn't think they wanted to do it, but they must have twisted their hands to do it. Why am I saying that? Because before now, 3 days ago, the CBN came up with a circular that said every bureau de change must have to recapitalize. We have a tier 1 bureau de change for $2 billion and a tier 2 maybe for $400 million. I mean, say 400 million, 500 million naira. But as it stands now, when you see the numbers of bureau de change that they are giving these FX, how many of them are actually in tier 1 or tier 2? What are the criteria that was used to give them this FX? Do they meet all those what the CBN has set out to do? So I think initially they seems to have a roadmap, but I think because of the pressure, it seems to be digressing a little.
Now, based on what you just said, we know that there are 5,690 BDC operators nationwide. That's what you get from CBN website. However, only 1,373 BDC operators have actually been screened to get this particular allocation. Now, looking at this, does this seem to you like maybe they looked at some of those requirements they put in the guidelines to probably, screen it down to 1,000 where we are now? What do you think?
Perpetua, we don't have the crystal ball. They've not even told us, like I said, they've not even told us what were the modality that was used in getting some of these BDCs. So we'll wait for them. But again, you remember that it's ongoing. I spoke to some of the BDC people yesterday traders yesterday. It seems to be that it's an ongoing process. So more names may be added as time goes on. So maybe these are the people that will enjoy the first installment of it. Maybe the second time we have some different other names getting that. That's what I think. I think it's ongoing. Again, maybe again I'm looking at, okay, they do this, and towards the end you begin to see them when they know that they have been able to stabilize the market, then they will go back to their initial roadmap at the capital base of tier 1 bank and said, okay, maybe if you're a tier 1 BDC, you get so amount of location from CBN. If you're a tier 2, you get, and you must register. I think they might do that later, but I think what they are more interested in now is to stabilize the exchange rate.
All right, the devil, they say, is in the detail. We're looking at the sum of $20,000 to be sold to each BDC at the rate of 1,301 naira to the dollar. Now, this particular figure represents the lower band rate of executed spot transactions at NAFEM. That was for the previous trading day as of 27 February 2024, which means this probably will change, based on this particular criteria. And then all BDCs can sell to end users at a margin not more than 1% above the purchase rate from CBN. I'd like you to speak to this. What do you make of it?
Well, if the NAFID rate as yesterday was about 1,400 or thereabouts, and you are selling at the BDC, selling to the BDC as 1,300, is that the true value of our naira as it stands now? Knowing fully where the NAFTEX end is where you even have more liquidity than the BDC end. So we need to see maybe the NAFTEX end will now in turn close up with the BDCs. And then I hope to see that at the end of today. But one good thing that has happened is that they have already created panic in the market. Like I always tell them, speculators are part of the market. They are allowed to play the market. But the best way you can deal with speculators is to come up with a better product. And so I'm happy that they've come up with a better product that is causing panic and fear and among the speculators, and also greed is also playing in between those lines now. So we could begin to see that the rate will begin to stabilize. Instead of going upward, we may see a downward movement, and that might be good for us because the major challenge in the market has been liquidity, and finally the CBN seems to be addressing those core liquidity issues. Like I've said in your program before, the challenge why we are where we are today is that you took away that market for 3 years. For 3 years, you did not create another market to meet the need of those retail FX traders. I mean, it takes FX users that need 1,000, 2,000, or some of them need as low as $500 or $200 to even pay for advert on social media platform. You took away those space and you didn't create another one for them.
All right, let's leave that particular story and move on to other stories. So let's look at some of the amendments being proposed to the CBN Act by the Senate. Now, this particular bill proposes to amend Section 8, subsection 2 of the CBN Act. It proposes single non-renewable term of 6 years for the governor and the deputy governors, and a single non-renewable term of 5 years for external directors appointed on the board of the CBN. What do you make of this particular amendment, or proposed amendment, as the case may be?
You see, the challenge in Nigeria is that this amendment came up because of what has happened in the previous administration. And it seems to be that, when you make a CBN governor last too long, then it seems to have most power to corruptly reach himself or do a lot of corrupt things. I think that's where this amendment comes in from. But then you don't have to look at one man then to begin to think of amendment. If you look at the governor of the Bank of America, they stay, I can't remember their tenure, but I know it's not 1 year tenure. You have them stay there for a very long time to create stability, to know how the market works and everything. So if we are to do something, we should also be looking at as the global best practice. What is a global best practice? That is what we should be involving ourselves in, not trying to make sure that something like this doesn't happen again because somebody did it before. It's all about the regulators or the administration that were there not putting their feet on the ground, or whoever was in the helm of the CBN became a tool to the executive rather than being independent. So we must not look because something happened, then you try to change up everything just to make sure that such thing doesn't happen again. It has to come from who is there. the law establishing the CBN that give a 2-year tenure for the central bank governor, I still think is not a bad law. I still think it's a very
All right,
good
we'll
law.
take a break now. We'll be back, and when we return, we'll continue the conversation. I believe you can hear me. Glad to know you're still with us. And I'm still speaking with Mukhtar Mohammed. We're looking at some of the amendments that the Senate is seeking for the CBN Act 2007. Mukhtar, thank you for staying with me.
Thank you.
All right, so in less than 30 seconds, I'll see if you can do this in less than 30 seconds. Now, the most intriguing proposal is the limitation on the federal government's borrowing from the central bank through ways and means advances. Now, this particular bill proposes capping such advances at 10% of the average government revenue in the prior 3 years, with mandatory full repayment within 3 months from the day it is made available. Now, it's also said that it tries to incentivize timely repayment and saying that any outstanding balance will be held against and deducted from the government's share of the federal allocations. I'd like to get your thoughts on this in less than 30 seconds.
Perpetua, like I said, there was a cover in the former one. It was whoever was in leadership did not follow that. And so whatever you are going to put in there, it depends on who is owning the home of that affair. The person could look the government in his eyes and say, look, the CBN is independent. We have a right to do what we have to do. We are not going to give you this. It was there before. It's not something new. They have just reduced it. But again, it is not in the document. I keep saying Nigeria is not devolved document. Nigeria is devolved implementations of those laws that are in those documents. So whatever they put in there is fantastic. If you want 1 year, 10%, 5%, come up with the penalty. But how implementable is it with the person at the helm of the affair? It's that time. That's what matters.
Well, I think that's a good place to anchor asking that particular question. It's all about implementation. Those laws were there, though some changes are being made to them, but they were actually there when these things happened. Thank you so much, Mukhtar Mohammed, for sharing your thoughts with me today on Business Edge.
My pleasure. Thank you for having me.
All right, we'll take a break now. When we come back, we have more for you today on Business Edge. Stay with us. Hong Kong plans to increase tax on high earners for the first time in 2 decades to reduce its fiscal deficit. A 2-tier tax system will be implemented from April, taxing income up to 5 million at 15% and anything above at 16%. This will affect about 0.6% of taxpayers and generate an additional $910 million annually. Despite concerns that this may deter finance workers, the impact is expected to be minimal. The city, which last raised its tax rate in 2003, has no goods services tax or capital gains tax. The government, which has historically relied on land sales for revenue, has halted residential and commercial land sales due to decreased demand. China's solar industry is expected to revise its growth targets for 2024, facing financial pressures and grid limitations that pose challenges to replicating last year's remarkable expansion. The China Photovoltaic Industry Association convenes in Beijing for its annual conference, with companies grappling with declining profits amid the government's continued push for increased clean energy production. Despite significant drops in panel prices, reducing costs for developers, manufacturers are confronting overcapacity pressures. This has led to discussions of potential consolidation and even bankruptcies. However, the industry now faces the consequences of excess capacity and intense competition, which have driven panel prices to historic lows. The industry is also contending with trade barriers and human rights allegations as it seeks opportunities abroad. Finally, oil prices retreated in Asia due to potential delays in the U.S. rate cuts and increased U.S. crude stocks, despite OPEC Plus's possible extension of output cuts. Brent crude futures and U.S. West Texas Intermediate futures both fell. Federal Reserve Governor Michelle Bowman signaled she is in no rush to cut interest rates, causing concerns about delayed economic benefits. The rise in U.S. crude stocks and hopes for a Gaza ceasefire also influenced the market. Despite Israel agreeing to halt military activities in Gaza for Ramadan, caution remains about a truce. OPEC Plus may extend voluntary oil output cuts, potentially tightening the market. Russia announced a 6-month ban on gasoline exports from March 1 to accommodate rising domestic demand and refinery maintenance. We'll take a break now. When we come back, we'll have the final conversation for today. Stay with us. Ghana's President Nana Akufo-Addo emphasized the urgency of finalizing the country's external debt restructuring on Tuesday. This initiative aims to help the nation recover from its worst economic crisis in decades. And I am joined by Patrick Ba-Abankwa, a financial analyst and investment advisor. Thank you, Patrick, for joining me today.
Thank you for having me on your show this morning.
Absolutely. Now, Ghana's president has stated that the country aims to finish restructuring its external debt as soon as possible. Talking about as soon as possible, how soon are we looking at here, and what will be the impact of further delay?
So from projections, we are looking at the discussions ending somewhere between now and the end of June of this year. That's the projection, because when you listen to the Paris Club and other external debtors, that's the kind of discussion that they are putting forth to the Ministry of Finance and the government. It has delayed a bit because some of the conditions that were placed forth by the government were not favorable to them, so there had to be some renegotiations, and that has delayed the process. Now, the question of if the process keeps on dragging, what's going to be the impact on the economy? At the moment, we've seen some kind of a better state of the economy since the beginning of the year as compared to last year. Last year, we were in the region of about 53% when it comes to inflation. But since the local debt exchange program ended and also some kind of assurances from IMF came in place, the economy is beginning to recover. If the external debtors who also hold about a chunk of the debt of the country begin to drag their feet, then some kind of discomfort will begin to creep in back into the economy. And when that also continues again, it begins to weaken the confidence that some other creditors have with the country Ghana. So the earlier we settle on some of these discussions by way of closing the deal with external creditors, the better for the development and the economy of the country.
Well, let's talk about the current factors that might be slowing down this process.
Yeah, so the conditions that are slowing the process, one has to do with the duration of the restructured agreement. So that's the duration of the restructured agreement. Then two, some of the interest rates that are being agreed between the government of Ghana and these creditors. Then again, even the structure of the payment going into the future. All of these things, to a large extent, does not give some of the creditors comfort. And also, even the possibility of government being able to pay the extended loans that have been agreed upon. They want some kind of clarity in terms of government showing evidence that they have enough revenue to be able to pay the loans that are being pushed forward. So that's also another reason why the agreement or discussions have prolonged at this point in time. And until they get some kind of clear vision and clarity, they are not going to sign to some of these agreements. And that's why government of Ghana over the last 6 months or so, as part of its budget, has introduced a number of taxes to be able to rake in revenue, so that they'll be able to pay some of these foreign debts that will be due if they are able to restructure them today.
All right, well, Ghana secured a $3 billion loan program with the IMF last year. And of course, in January, it reached a deal to restructure $5.4 billion of loans with its official creditors. Talk to us about the impact of this on the economy so far.
So what that has done so far is that giving some kind of confidence to people that want to come and do business in Ghana. So for the last 2 years, we had some international companies moving their plants and production from Ghana to other external countries or neighboring countries like Nigeria and Sierra Leone. Now, when there's an agreement with IMF, it begins to give them confidence that things are going to get better. So some of these institutions begin to bring forth their funds back into the country. In terms of foreign companies that are also in the country who ordinarily would have repatriated their funds whenever they make profit, some of them will want to keep their funds back in the country. And once they keep their funds back in the country, it strengthens the local currency of the country. So you realize that our currency has been fairly stable for the last 6 months or so. Again, it also impacts on inflation. Inflation is also now on the declining stage for the last 5 months or so. And that together has direct impact on the purchasing power of people living in the country. So even though we say the recovery has been a bit slow in terms of the impact of the IMF deal, with time, if things go as they are going at the moment, we expect that things will get better between what we experienced last 2 years, and what we should end the year 2024 with.
Well, let's look at, long-term economic policies or reforms that Ghana should implement alongside debt restructuring, just to ensure, debt sustainability in the future. What are the things you are looking at?
First thing is that we need fiscal discipline. The government should be very disciplined when it comes to its spending. Projects that will not be adding to the revenue of the country immediately should not be embarked on. Again, government should also ensure that taxes are collected and they are used for the rightful purpose. Issues relating to corruption are still very prevalent in this country. So I think that government should also continue to stay within its budget to be able to ensure that everything that is being done are being done according to what has been planned and approved by Parliament. For me, these are the critical things. Again, we should focus on improving the service industry. When you look at the GDP of this country, service industry takes more than half of that. So emphasis should be also placed on the service industry. Again, agriculture, which is the second contributor to the GDP, should also be enhanced so that we will get more revenue from that place and also be able to employ the teeming youth that are unemployed in this country into some of these sectors that I've mentioned, like the service sector, the manufacturing sector, the agriculture sector. Once these sectors are strengthened, it has ripple effect on increasing the revenue of this country. And once revenue is increased, it leads government to be able to stay within its course and be able to also embark on infrastructure projects, which will lead to the economy revamping and boosting beyond what we are seeing at the moment.
Well, as a financial advisor, I won't let you go without asking you this particular question. What are the potential risks and, benefits for private investors who are holding Ghanaian international bonds, in the context of the ongoing restructuring process?
I think the benefits or the good thing about holding the bond is that once they are restructured and government is laying down its process in line with what has been agreed with IMF, returns that they are going to earn from some of these bonds will be higher than what we have on the other markets. So that's one benefit to them. Returns will be better for them. Two, government of Ghana over the last 10 or 15 years has a record of also keeping to its promise when it comes to paying its bonds until we recently entered into the debt exchange program. So there's some kind of comfort or some kind of confidence that if you keep your funds in Ghana, one, you are going to get higher returns. Two, when the time is due for you to receive your returns, you're also going to get it. So that confidence alone is also something that they should be mindful of. Again, they should also account or demand accountability from the government of Ghana so that all these plans that we are talking about will be adhered to. If they find out that things are not going as expected, they have the powers as debtors or investors to call on government to do the right thing. And for me, because there's some kind of democratic nature between creditors, investors, and the government, they will have always a good chance to be able to implement their ways that they want to implement to be able to get their investment amount being grown over a period of time. So for me, the is quite okay. It's just a matter of looking for opportunities within the country to be able to invest and get the returns that they require.
It's a pleasure having you, Patrick Bankwa. Thank you for sharing your thoughts with me today.
Thank you for having me on the show once again. Thank you.
Well, that's our offering on Business Edge today. Thank you for watching. I am Perpetua Fasanmi-Peter. Enjoy the rest of the day. Bye for now.